With consumer confidence ticking higher in September, signs of life are coming back to the travel industry. Occupancy rates were in line with 2019 levels in September, and domestic travel intent trended higher. That's according to data from STR and the Conference Board. And of course, we got a lot of positive airline earnings as well to support that notion. Joining us now to discuss, JMP Securities equity research analyst Nick Jones. Nick, you covered the digital travel companies, the Booking.coms of the world. And I imagine that the picture is similar for them. Is it sort of a rising tide lifts all boats? Are we just seeing a kind of rosy outlook right now for the travel industry writ large?
Yeah, I think that's right. You know, the airlines have given some good commentary. The trends remain resilient. Occupancy rate, as you pointed out, is back to 2019 levels in September. Conference Board is saying intent to travel is increasing. Average daily rates are elevated still, indicating demand is still high. So trends are really looking good into the end of the year, and this bodes well for early 2023. So I think near term, that's absolutely right. But longer term, when we look kind of further into next year, the probability of a recession continues to increase. And if you look back over history, generally the spend on travel does start to decline in a recession. So I think in part, that's what's maybe keeping these stocks from really breaking out amid kind of near-term positive data points.
Help us keep some of the airlines honest here. From what you're seeing in terms of the number of different flights, the routes that are available, is there actually more capacity that is increasingly being added on here? And is that translating through to better fares for customers from what you've been tracking in your own research?
Yeah, I mean, so far the intent is there, the demand is there, but it does not appear that fares are really coming down yet. From the kind of the checks we've done, and it's anecdotal, you know, the price of flights are still pretty elevated, and so are the price of hotels. So despite there still being pretty high costs, the demand of travel is still there. You know, we have heard some commentary, particularly at the hotels, that not all of the rooms are actually available today. Because they don't have the staffing to make them available. So that could in part be why some of, you know, the average daily rates remain elevated. So as kind of more supply comes on, it'll be interesting to watch if the airlines and the hotels actually lower prices, or do they kind of hold on to where prices are today as kind of input costs increase.
What about the sort of international lumpiness, if you will? I mean, a Booking.com, which gets more of its revenue from Europe than the others, is that then more vulnerable?
Yeah, there's kind of puts and takes there. So as the U.S. dollar strengthens, it could create some FX headwinds kind of to revenues and costs at Booking. But at the same time, the intent to travel from the U.S. to foreign destinations has actually increased back towards 2019 levels. So a strengthening U.S. dollar can benefit a company like Booking as more U.S. citizens look to travel you know, to Europe and outside of the U.S.
Is Airbnb still in any type of growth phase from right now, from what you can see?
Yeah, Airbnb is, you know, they've benefited from really making alternative accommodations, really just another accommodation. They've really normalized that type of accommodation to consumers. Their growth does appear to be moderating. We have a market perform rating on it, largely due to valuation. But what they've done is, you know, it's heroic what they've done to kind of a new accommodation class. The company still has room to add experiences to its offering. They could have promoted listings to kind of the supply side of the platform that could continue to drive net revenue kind of faster than we're looking for today. But we look for more evidence before we really start baking that into our models. But from what we can tell, it looks like kind of the, you know, GBV growth at Airbnb is going to be in line with kind of Expedia and Booking in a couple of years and be at similar kind of nominal dollar growth rates.
All right, good time to be a Bills fan. See the helmet in the back of your shot there. JMP Securities equity research analyst Nick Jones joining us here today. Thanks so much, Nick.